episode 189. And as far as we can tell, this is the first out of 159 episodes that will be done solo, because just before we went on air, folks, that's why we're a few minutes late, Pete's internet got cut by some enterprising cable dudes in Florida. So the Rebel's Edge, normally I would introduce Pete and say, hey, this is Pete and John, and we're here for the Rebel's Edge. You will get the Rebel's Edge still, but unfortunately, it will just be me, because Pete is out of commission by virtue of that cable cut. And he's not a happy camper. I'm sure there'd be a lot of explicatives flying around if we did get him on, which still could happen, I guess. But as usual, welcome to the Rebel's Edge, folks. Always a way to get something done if you work at it hard enough. And Jared and I are going to get through it. Jared is, of course, the gentleman who's putting up the visuals. You see everything from the dancing bears and bulls, karate chopping bears, apparently, because the Bears are winning today, unlike our Chicago Bears. But they may win, too. They may have a good season yet. But anyway, welcome, folks. Great to have you here. Jared's going to be handling the rest of the duties, and I'm going to be describing what we see, starting with the Macro Minute. So today, normally what we do is we each get 30 seconds for the Macro Minute because we don't like wasting your time. So Macro Minute today, I'm going to say Republicans and Democrats will basically praise themselves for diffusing a debt time bomb that they set and lit the fuse to. That's right, because this is all theater, folks. Is it theater that we don't pay our bills? No, and we have never not paid our bills. But keep in mind that when we pay our bills, we're paying the interest. We're an interest-only mortgage in America for $31 trillion. So we're only paying the interest. We will likely never pay the principal. I can't really imagine how we're going to pay the principal, but we will continue to pay the interest. And that's what these jerks in Washington have put the gun to their own heads about this. Could have solved it months ago, could have solved it weeks ago. Instead, they'll go right up to the edge and then they'll fix it. And they'll say, oh, big victory. Let's pat ourselves on the back. This is like a football team going on the field and having 8 fumbles and saying, well, we could have had 10. I mean, it's pretty stupid. So that's the Macro Minute. Now we're going to get into Fantastic Futures.
Fantastic Futures.
That's one of our favorite sound effects, Jared. Fantastic Futures today. I'm going to point out that oat futures are down 3% today. They're also down 14% year to date. Pete talked about wheat yesterday, also down year to date. And I bet you know that both of these commodities, softs as they're known, go into a whole bunch of things. They're inputs into a whole bunch of foods. Oats, of course, for hot cereals for breakfast, maybe baby food, granola bars, bakery products, that kind of stuff. Wheat, a whole bunch of things, including bread. And the inputs are down, but the costs are up. Once again, I offer to you that it is not the $15 an hour or whatever that they've scraped together to pay the folks that help them put this food on the shelf. I think it's a little bit of greed, perhaps, that's driving up some of these prices, because it's not every input. Some inputs, orange juice, I get it. But not oats, not wheat, not a host of other things, corn, that are virtually not moving higher. All right. So that's pretty much it for Fantastic Futures. Now, I would remind some of you, Jared, if you can put up that slide perhaps, for the Market Rebellion Live. This is something, folks, that we do a few times a year. It's limited to 25 people. Those folks who can make it out to Napa next week, it is the 8th through the 10th of June. As you know, we kick off June tomorrow. This is the 31st, the last day in May. So we will be out there. Pete will be there. I will be there. We'll have a host of our instructors, mentors, and coaches out there, people that put up the subscription stuff that we are known for over at Market Rebellion. It's limited to 25 people. There are a few slots left. So if you'd like to fill one of those remaining slots, go to marketrebellion.com/Sonoma. That's marketrebellion.com/Sonoma. And you could join us out in Napa. Remember, it starts at 6:30 in the morning, folks. That's when trading starts out there. So it goes from 6:30 in the morning until 1. And then we get to go visit vineyards and have a good time. So if you'd like to join us, go check out marketrebellion.com/Sonoma. All right. Now we're going to get started with AAP. This is Advanced Auto Parts. And it was a horrible report. The stock down 30%, not just double digits, but basically losing a third of its value today. And the reason for that was, well, let's see, they earned 72 cents. They were expected to earn $2.60. Now, revenue came in at about what the street was looking for, $3.42 billion or thereabouts. But they're not dropping much to the bottom line, not nearly as much as people thought. And for that reason, and the fact that they cut their outlook and the dividend, because the dividend, basically they cut it 83%, folks. And when you cut a dividend, that's a pretty drastic move. Obviously, they're trying to hold on to as much capital as they can. And that's not a good sign. So Advanced Auto Parts, they're going to be opening fewer stores. They're making operating revenue and margins are both shrinking. So this is another sign that consumers are probably stretched because they sold as much as usual, but they couldn't take as much profit. They had to eat it rather than, like I said in the previous with the fantastic futures, rather than them having inputs that aren't up and yet their prices are. In this case, the prices are probably the same or higher, and they weren't able to charge those, pass on that to the consumer. And that's why you get a 72-cent price or for bottom line number versus the $2.60 that they thought they could get. All right, let's talk about Ambarella, because one thing for sure is that anything in the chip space is hot, right? Nope, not Ambarella, down double digits. They're an edge semiconductor company. Fiscal results didn't live up to expectations. So similar to what we just described above with what's going on at Advanced Auto Parts, they pretty much stunk up everything, including guidance. Non-GAAP gross margins shrank. Virtually everything I'm looking at here on the screens, folks, was down. And that's why the stock is getting trounced. So that's Ambarella, AMBA, down double digits. All right. Let's take a look maybe over here at UHaul, another sign. And I'm not trying to cherry pick these, folks. The way Pete and I go about this is we look at unusual activity. We look at volume of trade. We look at what the percentage move is in that particular stock. And in the case of UHaul, they're down double digits because they reported a 16-cent profit versus a 44-cent profit year over year. That ain't good. Obviously, revenue also missing, not good. And self-moving equipment rentals and so forth were down some $40 million versus where they were year over year. So business overall, not so great over at UHaul. We all know what UHaul does. Here was a comment that I saw about their earnings from one of their people. Overall moving activity has returned to historic trends. In other words, not as many people leaving California and New York. There were so many that were leaving that they basically had to deadhead trailers back into those two states because people were leaving at such a pace. Now, without them renting as much, UHaul's margins have shrunk. All right, let's talk about Meta, because Meta, which is Meta Networks or whatever, they're basically flat, but the market is down over 200 points for the Dow. S&P and NASDAQ getting hit as well. Why are some of these tech stocks doing as well as they are? Well, if you look beneath the surface, it's not just that the potential for AI with Meta in particular, but for Apple, for Microsoft, for Alphabet, for more or less four of the horsemen in tech. The reason is that they're buying back their own shares furiously. Let me tell you how furiously. Meta spent $9.2 billion in the first quarter, just the first quarter of 2023, buying back their own shares. Again, it's their money. They can spend it as they want. Like Warren Buffett said, why would you give money to a perfect stranger just because they own your stock? So they could put out a dividend, and instead they're doing something that benefits them and the insiders in the company as much as anybody could possibly benefit them by buying back the shares. They're pushing the shares higher by buying them back. So that's Meta. Alphabet, 14.5 billion in buybacks first quarter alone. That's equivalent to only about 1% of their outstanding shares. In the case of Meta, it was about 1.7%. Microsoft bought nearly $5 billion worth of its stock back, which is a big number. That's only equivalent to about 0.2% of their shares because they have so many issued. And then Apple spent 19.6 billion. Warren loves that. Mr. Buffett, he's like out there saying, yeah, this is a good thing that they're buying back shares. It sure is. It's why the stock has gone to over $2 trillion and pushing towards 3 trillion as we speak. In the first quarter, they bought back that 19.6 billion. It's about 0.7% of their shares. So that wraps it up for the stock side of the Rebels Edge. Now we're going to talk about a little sports. And this is the part that Pete always shines at. But I'll say Pete was going to cover Major League Baseball and who is king of New York. And his question was, is it Pete Alonso or Aaron Judge? Now, we all know Aaron Judge broke the record in the American League last year for home runs and is a fabulous talent, wonderful young guy, and people just love him. Well, the same thing's true of one Stevie Cohen, the owner of the Mets, and his prize, which is, of course, Pete Alonso. These are two great players worth the money that they're being paid because the people through the turnstiles have been just gangbusters, folks. And I'm here in New York. I'll be on Larry Kudlow's show later today at 4 p.m. Eastern. So I'm here in New York. It's 72 degrees or so. It's a perfect day for baseball. But the beginning of the seasons, as you know, in April and so forth, that's pretty tough. So the fact that these guys are coming out of the gates with a lot of people coming through the turnstiles is because of these superstar players that the Mets and the Yankees were able to put on the field and will keep putting on the field is my prediction. All right, now let's talk about Mr. Garoppolo, because Jimmy G just signed a monster contract. It is a fabulous deal for Mr. Garoppolo. He's basically drafted in the second round in 2014. So a drafted player, unlike me, I was a free agent. Eastern Illinois is where he played. We all know that he backed up Tom Brady for a while. Then he got his shot in San Francisco, took him right to the edge of getting to the Super Bowl. But one thing about Jim, which has been unfortunate throughout his playing career, not the backing up side, but the playing career, is that he tends to because he's not a huge 230-pound quarterback, he tends to be a little fragile, maybe. I'm not saying he's not a brave guy. He's out there. He's taking hits from 300-pound guys that run 4.5s and things like that. So I would not like to take those hits. But Jimmy has had to endure that and he has still come back and played year after year after year with injury after injury after injury. Well, the Las Vegas Raiders took a shot on him, and they're giving him $72 million, $72,750,000 if he fulfills all 3 years of this particular contract. I think Pete told me about 40 million of the contract is guaranteed. So this is a great contract for Jim. It puts him in position now to totally be the leader on that team for several years. I'll cross my fingers for him and hope that he has a couple of healthy years and that the Raiders drafted some decent offensive linemen, because it's been a problem. And you don't need to look further than Mr. Carr, who now is plying his trade down there with the New Orleans Saints. And much happier, I'm sure, to have a great defense and a big offensive line to keep him a little more comfortable. Hopefully Jimmy G gets that same sort of treatment. Well, that's going to do it for us today, folks. I'm sorry we started late. I really appreciate all of you joining us, especially if you're joining on thestreet.com, where we are. If you just hit the investing tab, you'll see the Rebels. And it is a rare thing that a cable gets cut. I remember maybe 2 or 3 months ago, a cable in Germany got cut, and it grounded a whole bunch of Lufthansa flights. Nobody was injured, but the cable got cut. Nobody was injured at Pete's, but somebody might get injured if they do it again. Anyway, folks, we really appreciate you tuning in. Please watch at 4 o'clock Eastern time today, Larry Kudlow's show. I will be on there. I appreciate all you joining us. Pete will be back tomorrow. See you then.